one of the Bitcoin ETF applicants just told us big things are coming. I want to talk about that and talk about something that a lot of people aren't even looking at that make this next year so freaking bullish. A lot of people don't understand it, especially if you've only paid attention to crypto and you don't have a background with any kind of traditional stock market investing. So hit subscribe so you can see future videos just like this one as soon as I push them out to the public. Also, there's a link down there to Margex where you can trade cryptocurrencies. You can see some big green candles. I mean, the thing is, a lot of people are going to get rich this next bull run, but some people are also going to trade and be able to make large amounts of money, even more than they would just by buying spot. If they trade leverage, if you feel comfortable with that, you can check out the link underneath the video. There's no KYC, there's no VPN, there's a link to Margex and to Blowfin as well. Both of them give deposit bonuses. There's also a link down there to HG Access. This is something that we just unveiled today. This is a Patreon group that has access to a bunch of influencers. There are going to be about 10 of us at least in there doing weekly live streams as well, where you can ask questions. We're going to tell you what we see in the market. There's a lot of alpha there. There are people researching different crypto projects for you and writing detailed analysis. This is going to be something that sets people apart from the general public during this next bull run. I'm really excited to be part of this because there's going to be so much news, so much data that you're not going to get anywhere else. Check this out underneath the video as well. Now, crypto is running up a little bit. You can see Bitcoin in the mid 43,000s. Now, what I will say is we have the ETF applications, the hype behind that this week. Galaxy CEO and Spot Bitcoin ETF applicant says big things are coming. Mike Novogratz just said that, saying to block your calendar, so to speak. Now, I will say I'm really excited for the next year. There are a lot of things I think are really bullish for Bitcoin, including these ETF applications. We talk about this a lot, though. So today I want to talk about something a little bit different. And that's how important it is that the Fed is going to lower rates. If you haven't heard recently, the participants expect 3 rate cuts for 2024. Keep in mind, just a month or two ago, they expected 0 rate cuts. So they switched very quickly to 3 rate cuts because inflation numbers are low, maybe because some politicians want the economy to look good before the next election, that kind of stuff. There are all different reasons why you might want to lower rates right now. Now they're saying 3 rate cuts. Now this could turn into 5 rate cuts. This could turn into 8 rate cuts. We don't know. But a lot of people don't understand how important this is. One thing that people look at in the traditional markets is discount cash flow calculators. I'm not going to put you through too much here. I'm not going to make it really difficult to understand. But this is something that we should be paying attention to even for crypto. So it doesn't work out exactly the same, but if you go to a website like this is Guru Focus, but you can go to anyone. I don't really care. I have no affiliation with it. You can take a look at a specific stock like Tesla. It looks at their EPS. You give a discount rate, and then you talk about how fast you think it's going to grow, and it spits out a fair value for you. Now, there are a lot of different things that have to be taken into account here, a lot of things that you have to guess into the future. So in this scenario, I said the discount rate was 10%. Now a discount rate is the basically a mix of the risk-free rate plus any kind of risk premium. So we just put it at 10% here. I said Tesla's going to grow 30% for 10 years, and then it's going to go down to 12% for 10 years. So this gave me a fair value of almost $300. Now, I'm not saying this to try to tell you the price of Tesla. All I want to show is this, the discount rate. The discount rate goes up and down depending on federal rates, depending on what the Fed does with their prime rate, with their target interest rates. So let's say the discount rate goes down 1% because they do 4 rate cuts throughout the year. Look what that does to Tesla's price. It moves it up about 10%. Now, if I go up, it moves Tesla's down 10%. So basically, if risk-free rate goes up, the value of companies, of assets that are going to make money out into the future goes down. If that risk-free rate goes down, then the value goes up. Now, a lot of people don't look at this for crypto, but it works in a similar way. if we're investing in assets that are higher risk, that actually some of them do produce cash flows, just not to the people that hold them, right? Like they have fees on the network. Some of them do have staking, so I guess you could count that as a cash flow. But you can look at some of these assets the same way. Now, another way people might think about it is just, hey, if this risk-free rate goes down, then I'm just going to invest in higher risk assets, like Bitcoin, like Ethereum, like Solana, like XRP. And that's maybe a little bit simpler, but a lot of the time people will look at that. A lot of people just realize that, like in the back of their mind. They might not ever go through a discount cash flow calculator, but they might realize, okay, well, rates are coming down. I'm not getting paid as much in my money market account, so I better put some more in the market. I want to outperform, right? And I can't get good returns at a 2% savings rate or a 3% savings account, so I need to put more money in the market. That is how a lot of people think about it. Now, this is the money market funds showing all the way back to 2014. And you can see for a while when we had these low rates, the money market funds just kind of stayed sideways between $2.5 and $3 trillion. Now it's spiked up a lot during 2019, 2020. This was a time period where they started to raise rates. If you remember, the Fed started to raise rates and we got up to about a $4.7 trillion money market amount. And then COVID happened and we cut rates. So you can see like people still kept some cash on the sidelines, but there was a lot of money that was flowing through the system. Think about how many trillions were printed and none of it hit money market funds. I mean, take a look at this. Q2 of 2020 actually had more in money market funds than Q3 of 2022, or about the same. So there's a lot of money that hit the economy that just went straight into stocks, straight into crypto, straight into real estate, straight into business, all that. Now we've started to raise rates really aggressively from 2022 to 2023. We increased the amount of cash and money market funds by 25% or so. And now they're talking about lowering rates. So we might see a lot of money start to hit the market here very soon, or a lot of money start being printed, I should say, and none of it going into money market funds. We could actually see a dip kind of like we did here, where we went from 5.1 trillion down to 4.75 trillion. This causes markets to pump. There's also some news that California is becoming the first state to offer healthcare insurance to all undocumented immigrants. I saw that this is going to cost like $3 billion a year. There are just things like this that happen all the time. Some state says that they're going to spend some extra money. Some department says that they need to increase their budget. There's some new war that we have to protect people with. So there's always more money that's being printed, always more money that's being spent. And they have to lower rates because otherwise the debt load on this debt is going to be too much. The payments are going to be too much. So they need to increase GDP enough to get themselves out of this problem. Let me know your thoughts on all this underneath the video, though. I think a lot of people just don't consider how important lowering rates is because it can push up the value of risk assets significantly. And we're just starting to see that flip where the Fed's saying, oh, we really should lower rates. But this is just the first time that they talked about lowering rates, and they're already talking about nearly 1%. So we could be lowering rates much faster than people expect right now. Thank you so much for watching. I really do appreciate it. Check out the links to HG Access underneath the video, along with the links to Margex and to Blowfin, and I'll see you in the next video.